In this video, I will show you a step-by-step full example of how to prepare an income statement given a trial balance. This is the trial balance of B Stones. Here's an easy way to remember the layout of an income statement. First, we start off with revenue. So sometimes instead of seeing the word revenue, you could see the word income or sales. The next step is to subtract cost of goods sold from revenue. Subtracting cost of goods sold from revenue gives the gross profit. The next step is to subtract operating expenses from the gross profit to get net profit. Given the trial balance, let's first identify the items that will go to the first part of the income statement, which is revenue. So we have sales and returns inwards. The items to go under cost of goods sold are opening stock, purchases, carriage inwards, returns outwards, and closing stock. Next, we subtract cost of goods sold from revenue to get gross profit. Let us now look at the items that will fall under operating expenses. The expenses are carriage outwards, salaries and wages, motor expenses, rent, and sundry expenses. After subtracting operating expenses from gross profit, we get net profit. The items left unhighlighted are items that are found in the balance sheet, so we do not cover them in this tutorial. Let us prepare the income statement. The first thing to put is the heading, which is B Stone's income statement for the year ended 30 April 2024. After the heading, we enter our sales figure, which is 210,420. Then we subtract returns inwards. Returns inwards refers to when customers buy goods from the business but then return the goods back to the business. The reason why they are subtracted from sales is because once these goods are returned to the business, they are no longer considered as sales. After subtracting the returns inwards from sales, we get net sales. The next part of the income statement is the cost of goods sold section. It begins with the opening stock, and then we add purchases. We also add carriage inwards. Carriage inwards is added because it is an expense that is made when transporting the purchased goods. The next step is to subtract returns outwards. Returns outwards refers to when goods are returned by the business to the suppliers. So returns outwards are subtracted because they reduce the amount of purchases that the business has made. The closing stock is also subtracted to get cost of goods sold. The cost of goods sold is subtracted from net sales to get the gross profit. After calculating the gross profit, we now calculate the net profit, and to do this, we have to subtract the expenses. The expenses are salaries and wages, motor expenses, rent, carriage outwards, and sundry expenses. We then subtract the total expenses from gross profit to get the net profit. This is an easy example to follow, and I hope this tutorial helped.